Hey everyone, welcome back to Corporate Decoder. Today RRC just filed an 8K about their annual shareholder meeting, and I'm seeing a few key takeaways about how things are run. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company held its annual meeting where shareholders voted on important company matters, and the results give us a peek into investor sentiment and confidence. This is a report that companies must file when big things happen, and today we are looking at the results of Range Resources Corporation's annual meeting of stockholders. This meeting is where shareholders, the owners of the company, get to vote on critical decisions. The meeting took place on May 13th, 2026, and it looks like a good number of shareholders were there, either in person or by sending in their votes, which is a positive sign. A quorum, which means enough shareholders were present to make the meeting official, was confirmed with over 217 million shares represented. This shows a healthy level of engagement. The first big item on the agenda was electing the board of directors. These are the people who oversee the company's strategy and management. Range Resources had 7 nominees, and they were all elected. Let's look at the numbers for each director. For Brenda Cline, there were almost 197 million votes for her, and just about 1.9 million votes against. That is a pretty strong endorsement. Abstentions were around 249,000, and broker non-votes, where the broker holds the shares but did not receive instructions from the owner, were about 18.8 million. Margaret Dorman saw similar support with nearly 197 million votes for and about 1.9 million against. The abstentions and broker non-votes were also in a similar range. Charles G. Griffie also received strong backing, with over 196 million votes for and close to 2.2 million against. Christian S. Kendall had an even higher number of for votes, with over 197 million and just 1.8 million against. Greg G. Maxwell also garnered significant support with over 197 million votes for and slightly over 1.7 million against. Reginal W. Spiller had a slightly different split, with around 192 million for votes and about 6.6 million against. While still approved, this shows a bit less enthusiasm compared to some other directors. Finally, Dennis L. Degner received a very solid vote of confidence, with over 197 million for votes and only about 500,000 against. The abstentions here were higher at around 978,000. Overall, it is clear that the shareholders at this meeting were happy with the current leadership and re-elected all 7 directors. This typically indicates a level of trust in the company's direction. Next up was a very important vote, often called say on pay. This is where shareholders get to voice their opinion on how executive officers are paid. It is an advisory vote, meaning the company does not have to follow it, but it's a strong signal of shareholder sentiment. Here, the company received about 196.4 million votes for approving the compensation packages. That is a very strong number, suggesting that most shareholders feel the executive compensation is fair and aligned with the company's performance. There were about 2.3 million votes against and 371,000 abstentions. The broker non-votes were again around 18.8 million. This shows a broad approval of how the company's top executives are being compensated. The final item was the ratification of the company's auditor, Ernst & Young LLP. This means confirming that the company is sticking with the same accounting firm to review their financial books. Think of it like getting a trusted accountant to double-check your taxes. And this vote was overwhelmingly in favor, with over 214 million votes for ratifying Ernst & Young. There were about 3.3 million votes against and 364,000 abstentions. This strong approval indicates that shareholders have confidence in the integrity of the company's financial reporting and the firm that's doing the auditing. It is essential for investor confidence to have a reputable auditor. The report is signed by Mark S. Scucci, who is the Executive Vice President and Chief Financial Officer. This officially confirms the information presented in the filing. So, what is the big picture here? The annual meeting results for Range Resources Corporation in 2026 show a company with strong shareholder support for its board of directors and executive compensation. The overwhelming approval for both the director elections and the say on pay vote suggests shareholders are generally pleased with leadership and how the company is being managed. The ratification of Ernst & Young as the auditor further solidifies confidence in the company's financial integrity. While the vote for Reginal W. Spiller was a bit lower, it was still well within approved parameters, with the oil and gas industry facing various market dynamics. Seeing this level of shareholder alignment is reassuring. Investors are often looking for stability and clear direction, and these voting results suggest Range Resources is delivering that. What I am actually looking for is how this alignment translates into future performance. The company's market cap is around $10 billion with a P/E ratio of 11.2. which historically aligns with stable, established companies in the energy sector. Major institutional holders like T. Rowe Price and BlackRock also suggest significant investor confidence. This meeting's outcome seems to reinforce that confidence. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, give us a like, subscribe, and join the Discord in the description.